morning, everybody. Welcome to the Trading Market Technicals morning call video for Wednesday, June 27th. And yesterday was another consolidation day. Low volume, grind higher, very boring. A lot of the stocks that I tend to follow on my watch list really have done not much of anything. We're sort of just drifting higher from Monday and Tuesday. And that tells me that I think the markets are in trouble, ready for another pullback. I've been mentioning this for the last week or so. We did get our little retracement back up, and we're almost there, filling up that candle, that large engulfing red candle from Friday. But in this video, I'm going to I want to just kind of really kind of check under the hood type thing. That's what I always like to say, and see where we are with the strength of the markets and why I think these markets are ready to roll over again. We have today, let's get into the economic data just real quick. Durable good orders are today, and May pending home sales. Durable good orders will definitely affect the markets and kind of move the markets one way or the other. So something to keep an eye on this morning if you're trading. And I think today with the consolidation we had Monday and Tuesday, I think all eyes now are going to be on the EU summit tomorrow. So I think we're going to get some fireworks going into the weekend. We do have the end of month window dressing, as I mentioned, and that's why I said maybe these markets might be propped up for that, and then I could see a continuation selling going into next week. We do have a holiday week next week, so it's something to think about. That's why I wouldn't want to be overly aggressive in this market. There is no volume to be aggressive, and going into a long weekend, usually you do get a drift higher. But again, this market is definitely news-driven and will trump the charts. So whatever the charts may be telling you might be doing the opposite. So just keep a note on that, okay? We have another big Obamacare Supreme Court ruling tomorrow at 10:30. That's another big market mover. So I would really focus your eyes on that for tomorrow. Maybe roll into tomorrow being flat or at least slightly underweight going into the next day. I did mention we have numerous head and shoulders patterns in various markets. Again, they are not confirmed until they drop the neckline, but that's something to be aware of, and definitely a red flag posting. So I want to get into the charts here, and I put this performance chart up. I think last week or the beginning of the week, and I was showing you that this dark blue is the S&P 500. You can clearly see how we have strength versus the other indexes. And here's the key index here is Shanghai, and continues to go lower. Now, until the Shanghai actually moves up a little higher and start to really get some steam momentum to the upside, I think this is one bellwether that we need to keep an eye on. I think these markets are going to be in trouble, especially the commodity sector. Okay, that is something that I really am watching. Crude oil, commodities, soft commodities are taking off the grains. Fertilizer stocks, I did mention that on Monday. So that's going to be a play that maybe on a pullback we could look to accumulate some of these fertilizer stocks. They're really on a tear right now because of the soft grains. Now, what I did here on the S&P, on the S&P 500, which is spiders, we'll take that as a proxy. We have a 5-minute chart, but I brought it in for the 2 days just to kind of show you that we have really done nothing. We've actually just sold off here on Monday. We rallied up, and then we did the same here on Tuesday, which was yesterday. No volume here at all. And I really wouldn't read too much into the momentum indicators on the 5-minute chart, but I just wanted to show you. And then we had a little red. We had a lot of selling at the end of the day in the S&P and the E-minis. A lot of big sellers came in at the end of the day and pushed it lower. And that's really scary. You don't want to really see that. I wouldn't advise that. But really interesting how large amounts of contracts were sold yesterday into the close. So I wouldn't doubt that we have a down day today. We did consolidate for a couple days, and usually when you get a move like that, we just resume the trend. Again, just the news can come out of Europe, can trump the chart, so you got to be on your toes for that. But you can see clearly nothing really going on here, unless you do a lot of scanning and looking for ideas, which I do during the day. I really didn't find anything too interesting that I wanted to take on some risk. But anyway, 5-minute chart, 2 days really drifting higher, low volume, not good if you're a bull, not good at all. Let's take a look at our momentum charts, momentum bar chart here. I love to look at this every day, and I haven't showed this to you in a couple days, so I wanted to get this out to you. We're really at about 100, so I wouldn't really focus too much on it. We're really kind of doing not much of anything. So we want to really get either way above here, way below there, so we can get a reversal. S&P stocks above the 50-day moving average. Not much at all here. Not much to tell you, but something to keep an eye on. Copper, big gauge barometer of the economy, and this will follow the Shanghai. Now, what I did today was I put relative strength to the S&P. Okay, copper here, and as you can see here, we are continuing to go down. Now, copper put in a couple of bottoming tails here the last 3 days, but I'm not seeing anything great. This could be actually just a bear flag into these averages and a continuation sell-off. So we want to really keep an eye on copper, see how that reacts in the next couple of days, and see if we can really get some sort of movement in some of these barometers here. Now, this is what I wanted to show you. This is really interesting. What I did here, same thing. I did the relative strength to a lot of the consumer staples, the healthcare, and the utilities. Now, these are defensive sectors. And what we like to see here, what I like to look at and gauge, is do we have when these indices, when these sectors start to move up, you're going to have defensive money coming into these sectors and coming out of energy, banks, tech stocks. More of the speculative risk-on type plays. So as you can see here, we kind of topped a little bit, but as you look at healthcare, just ripping, and this is not good if you're looking for a big market rally. Now, most of the technicians saying that we've topped in April, and I do believe that, at least for now. I want to see more evidence that we're going to take out the highs. I really don't see that happening, maybe getting into the end of the year. I do see markets in trouble, and I mean in trouble meaning that I do see further downside going into the summer, at least the end of the summer, chopping around, moving higher, then selling off. So very difficult type of trading environment if you're new to this environment. So we don't want to see this. This is not good, but I wanted to point this out to everybody and say, wow, money continues to go into these defensive names and bonds. And where it's coming out of is coming out of the tech sector. Now, if you look tech in the financials, and here's the energy, clearly a lagger. Financials, and we got the tech sector here. So look at the difference from the energy names versus the financials and the tech. Now, tech and banks really, believe it or not, held up pretty well, but still not what you want to see. We want to see this. This is what we want to see. We want to see an upward movement up, and then we want to see the defensive names roll over. Speaking of the energy names, I wanted to show you what I did put together was the bullish percent, S&P bullish percent energy, and here is a 9, which is a momentum moving average, an 8, 9. But we put a 9 in here, and as you can see, still trying to hook back up and break it back above here. This is something that we would like to see in the energy names before we really get involved. Now, I have a couple of pictures of some stocks that I want to show you, particularly the USO. We talked about that. And I do feel that the USO is trying to bottom, but we never want to really look to pick a top, top or a bottom. But when you're day trading, you're trading intraday, you could find some nice moves during the course of the day, and we'll get into that in a moment. But I want to go in through these names, and I want to show you like we always do. Big move lower, sideways move inside day from yesterday, from Monday. Not good. This is not good at all, and I just want to make sure we use caution. We are unwinding on our stochastics, but again, guys, something that you really don't want to see. I want to get some volume to the upside, and I want to get us back above the 20, which we did not. Clear leader, transportation sector, looking really dismal here. I mean, look at all of these indecision candles, these large engulfing. We need to get above the 20 and then start getting above the 50 to really get something going. Again, I'll be looking at this every day. This is definitely a barometer that you want to be looking at. So not good when a clear leader is weak, barely holding the 200-day moving average. Same goes for the IWMs. Russell, a good gauge of risk. As you can see here, holding at the 200, barely below the 20. We did have a little bit of a bounce, but again, a doji indecision. So we need confirmation if we need to take out yesterday's high, or if we do take out yesterday's low, then I think you're going to see additional selling come into these markets. We can't have a rally without the Russell and the transportation sector not participating, as well as the banks, but the banks are another story. Qs, as you can see here, just chopping around here. Again, holding up rather well than the other indices, but really not much doing much, telling us anything. Dow Jones above the 200, again, barely. We did have a little more volume, but it really didn't go anywhere yesterday. So I'm not really too happy with what I'm looking at. Last and not least, USO. Let's talk about that a little bit. I want to see the bullish percent start to hook up a little bit. I do see that we're consolidating here. Carving out bottoms and tops are processes, so it's a process, so they're gonna take a little time. We could actually dip below this. So remember, guys, 28. Let's call it 28.85 below that line. Take another 15 cents below that. You need to really get out because this oil can go lower. But for a trade on your radar, keep an eye on it. I'm watching it as well. Trading small intraday would be really the key. Just kind of get a feel for it, and then possibly once we get a move back up, the first move would be really around the 31.50 area, and then probably a back test of the downtrend line, and then we would really rock it from there on the way up. But that's going to take a while, especially with the markets being soft like this. This is something that you really need to pay attention to, okay? Again, for a trade idea, something to look at, we're at pretty big support. Can we bounce? Sure. But we really need to start taking out the little consolidation days that we had. Have you noticed that we had heavy volume 2 days, light volume the last couple days? So we really want to get back above the $30 area here on volume. We do have a little bit of a positive divergence forming in the daily chart, so that's good. That's also positive. But if the markets are going to sell off, then USO is going to go nowhere. Just keep that in mind, okay? All right, guys, have a great day today. Don't forget EU Summit tomorrow. Probably see a little further consolidation. Wouldn't be surprised if we go lower again today based on a 2-day drift higher on low volume. So, again, for the traders that are swinging a little bit more, I would say selling rallies is still the key from last Friday. And actually selling rallies wouldn't, if you're holding, would actually pay out for the last couple of days, other than a slow grind doing really not much of anything. But again, patience here is a big game that we play, being traders as well. Okay, keep your stops on, make sure they're in place, and we'll talk to you tomorrow. Take care. Have a great day, everybody.